All right, welcome to Talk Chickers. Today we are diving deep into Silicon Motion's Q3 2025 earnings call. And this one's interesting, folks. They absolutely crushed it, a clean beat and raise, but the market kind of just shrugged. So we're going to unpack the numbers, figure out the story here, and see what it all means for the next call. Let's get right into it. You know, right from the get-go, management came out swinging, super confident. The CEO, Wallace Koo, basically set the tone with this quote right here. He's signaling loud and clear that they see a huge opportunity to grab market share, all thanks to some big product cycles and things just going their way in the market. This is really the heart of their story this quarter.
Okay, so here's how we're going to break it all down. We'll start with a big Q3 beat. Then we'll peek inside the numbers to see what's really cooking. We'll look at management's outlook, tackle that weirdly quiet market reaction, and then wrap it up with our thesis on the next call. All right, let's kick things off with the headline results. And really, there's no other way to put it. This was just a clean beat and raise. No mess, no confusion, just strong numbers across the board.
And it's not just that they beat, it's how much they beat by. I mean, the street was penciling in about $225 million. SEMO comes in and drops $242 million on the table. That's a huge beat. We're talking 22% growth from last quarter and 14% from last year. That's some serious acceleration, and it just screams strong execution.
And if you thought the revenue was good, wow, look at the bottom line. The outperformance was even bigger here. They posted a full $1 for non-GAAP EPS. The consensus was way down at 81 cents, so they blew past that by almost 20 cents. That tells you they're running the business really efficiently and the right products are selling, which is all flowing straight down to the bottom line.
And here's the cherry on top, the real signal of confidence. They didn't just have a great quarter and raise their forecast. Nope. They started a brand new $2 annual dividend. You have to understand, in the semiconductor business, where you're always spending money, starting a dividend, that's a huge statement. It's management basically saying, we're rock solid and we expect the cash to keep rolling in for a long time. Okay, so those are the big, flashy numbers. But now for the important part. Why were they so good? What was actually driving all this growth? Let's peel back the onion a bit and see which parts of the business really lit it up.
And what's really key to see here is that this growth was everywhere. It wasn't just one thing. Their main controller businesses were absolutely firing on all cylinders. I mean, look at this. SSD controllers and eMMC plus UFS controllers both jumped a massive 20 to 25% in just one quarter. So this isn't some one-trick pony. The whole portfolio is accelerating.
And see, this all connects back to the story management is trying to tell. It's a pretty simple one, really. They're executing like crazy, they've got hot new products like the PCIe Gen5 controllers, and the huge demand for AI storage is giving them a nice tailwind. And that new dividend? Well, that's their way of putting their money where their mouth is, showing they're smart with their cash.
So you might be wondering, was this just a fluke? A one-time thing? Well, according to management, absolutely not. Their guidance for Q4 shows they think this momentum is just going to keep on rolling and maybe even pick up steam.
So here is what they're telling us to expect. For Q4, they're calling for revenue between $254 and $266 million. If you take the middle of that, that puts them on a path to over $1 billion a year in sales. But maybe even more important, check out the operating margin. It's set to expand to 19-20%. They're getting back to their old, highly profitable selves.
And you know, even with all this great news, management kept pointing to the future. The CFO said something really telling. Quote, "We're just getting started in enterprise storage." That's their way of saying, hey, everything you see now, that's just the starting point. They see this massive, super profitable enterprise market as this huge, untapped source of growth for them.
Okay, so this brings us to the real head-scratcher of the day. The results? Amazing. The guidance? Super strong. Management's tone? Off the charts confident. So why on earth didn't the stock pop? What's going on here? I mean, the disconnect is just glaring. You've got management painting this incredibly rosy picture with a raised forecast and a new dividend, and then you have the stock, which just yawned. It was up only 2.6% on earnings day, and it's still hanging out near its one-month lows. How do you square that circle? Well, the clue might be hiding in the trading data. Yeah, the price didn't move much, but look at the volume. It was huge, almost 2.5 times the normal amount. So a lot of people were definitely interested, but it seems like there just weren't enough new buyers willing to pay a higher price. The simplest explanation for that? The market was already expecting a great quarter.
The good news was already baked in. Okay, so if all that good news is already in the stock price, what do you do now? Where's the opportunity? And that brings us perfectly to our final section, the next call. Right, this is the million-dollar question for anyone looking at this stock. The market seemed totally unimpressed by an awesome quarter. So does that mean there's actually an opportunity here before the next earnings report drops? So here's our take on it, our thesis. 1, we think this momentum keeps going. In fact, we expect them to beat the high end of their own strong Q4 guidance, especially with all the AI and PCIe Gen5 stuff. 2, when they deliver another monster quarter, the market will have to change its tune. The story will shift from, oh, it's just a cyclical rebound to, wow, these guys are actually gaining share and their margins are expanding for real. And 3, that change in story, that's the catalyst. That's what will finally force Wall Street to re-rate the stock and break it out of its current funk. So because we believe their execution is going to keep surprising a skeptical market, we're putting our official equity research style rating on the stock, outperform, heading into the next call. And we'll just leave you with this to chew on. You've got these massive tailwinds from AI. You've got this huge enterprise market they're just starting to tap into. So the real question is the market just stuck looking in the rearview mirror? Is it completely underestimating just how well Silicon Motion is executing right here, right now?
This is not financial advice.